Tax and crypto in South Africa. The tax implications of investing in cryptocurrency. Welcome to Crypto. Big homie Spuda straight out of Cape Town in South Africa. Thank you very much, guys, for tuning in. The first thing we want to do, go straight to that shop sign on the count of 1, 2, 3. Click, 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 click. Thank you so much. And then we go over there to that subscribe button. Click, and then we switch on that notification bell. The first disclaimer I'd like to throw out there is that I'm not a financial advisor. I'm just merely a student that has created this platform for educational purposes and to encourage people out there to learn this journey with me. We're hearing that it's the future of money. We're hearing that it's digital currencies are here and they're here to stay because they're built on a blockchain technology that is also starting to get used for other things, and it'll be great for humanity in the future to make our lives easier. So hey, we throw ourselves in the deep end. We're learning this thing we want to know. But as we keep learning it, we're learning different articles from different platforms, reputable platforms. Be careful about your money. Don't give your money to anybody. Don't listen to anybody's advice. Learn it. Take the responsibility into your own hands to learn about this thing. That's why I'm doing these videos, because I'm merely a beginner as well. I am a student. Now, I've got an article here from moneyweb.co.za. Moneyweb.co.za put together an incredible article by Ciaran Ryan. Ciaran Ryan wrote this article titled, "The Tax Implications of Investing in Crypto." I think that's what a lot of us are asking ourselves. Even if we might not be impacted now, you're probably not an investor yet in cryptocurrencies, you probably will. And you also maybe looking into the future when the government starts regulating the space. What is going to happen as far as tax is concerned? And what is the current situation in South Africa right now as far as SARS? SARS meaning South African Reserve Bank, South African Reserve Services, the tax man basically, and crypto. What's going on there? The implications of investing in crypto, the tax implications. All right, let's start. Go straight to this article by Ciaran Ryan. I'll put the link on the description over there so you can read the article yourself. I probably might not read the whole article, but I'm just reading the article in here to just spike conversation and just to encourage you to go to other platforms, read more about the tax man, the implications, and investing in cryptocurrency. All right, heightened scrutiny. Before I read the article, let me mention that today, Bitcoin is currently sitting at $47,000 US. Quite exciting times, and I'm looking forward to the future of this thing. Some people are predicting it to reach $100,000 by the end of 2021. We don't know. I can't predict. I know nothing about it. I'm still new. Some people are talking about it reaching $1 million in 10 years' time by 2030. We don't know. All we know is that we're new in this thing and we're learning it, and it's currently sitting at $47,000. I bought it $33,000. That's when I came in a few months ago. And I'm excited as I'm learning and seeing the trajectory going up. The market is always volatile, going up and down. That's how we encourage you to be informed, be educated about the space first before you can start investing. All right, the article says, cryptocurrencies have entered the mainstream in the past few years, attracting the attention of tax authorities in leading economies. While cryptocurrencies have been conceived as an act of rebellion against the existing financial order, the taxman will still claim his piece of the pie. The taxman wants his money. Tax consultants have warned that the South African Revenue Service is starting to audit cryptocurrency investors and demanding that they provide proof of transactions from the various crypto investment platforms. Yet the tax implications of cryptocurrency trading and investing remains murky, in part due to the complexity around crypto-related transactions, including hard forks, where one cryptocurrency splits into two separate ones, airdrops, where a new cryptocurrency is sent to owners of an existing cryptocurrency, staked or stacked rewards, where a cryptocurrency earns you a type of interest, and a host of other cryptocurrency-specific developments. A crypto market moves at a lightning pace, but regulatory and tax authorities have been slow to keep up, and this has left many crypto investors scratching their heads on what to do for their year-end tax returns. Taxpayer non-compliance is made easier by the ability to hide assets in undetectable wallets. Only the cryptos are sold through recognized crypto service providers, such as Rivix. Do they become visible from a tax and regulatory perspective? Oh, sorry, let me read that sentence again. Only when cryptos are sold through recognized crypto service providers such as Rivix do they become visible for a tax regulatory perspective. This much we know: if you are deemed to be a resident of South Africa for tax purposes, you are going to be taxed on your worldwide income, and that includes cryptocurrency gains and income paid in the form of cryptocurrencies. Yes, we're going to have to pay tax, guys. We're already paying it, some of us now. Having a general idea of when taxable events occur make it possible for crypto investors to make informed decisions and avoid working in breach of local laws. That's why I'm encouraging education, so you understand the laws, rules, and regulations before you even invest in this space. Be informed, guys. Be educated. Sean Sanders, who's the CEO of crypto investment platform Revix, which is backed by the JSE-listed financial services group Sabvest, explains, open quote, most people aren't being paid for goods or services in cryptocurrency. Rather, most are buying cryptocurrencies with the goal that they increase in value. Merely holding cryptocurrencies in a wallet at a year end is not a taxable event. However, it is a taxable event when you sell your holdings and realize a gain, capital gain. Oh, wow. Or loss. Wow, interesting. Close quote. Tasia Trost, a tax specialist in Mazars, says SARS does not view Bitcoin as a current. What did I say? At Mazars, I think that's the name of a company. Tasia Trost, yeah. He says SARS does not view Bitcoin as a currency like the rand. It views it as property, like your car or house. That distinction has not been tested in court yet, though, and perhaps one day it will. Interesting article, hey? I'm sure I'm spiking some interest out there in you guys wanting to know more about tax implications as far as your cryptocurrency is concerned. All right, let's continue reading the article out here from moneyweb.co.za. Capital gains from crypto sales. A capital gain is a rise in the value of any asset held. Can I please have another one and a clean glass? Thank you. Sorry guys, I'm sitting somewhere outside and I'm having a drink, so I'm just ordering another one. Okay, let's continue. You know how Cape Town life is. It's just so beautiful. We're on our laptops. I got my phone. I got Wi-Fi. I'm sorted. I can be anywhere in the world. As long as I got my laptop and my phone and my sunnies, I'm sorted. That's a new world of digital currency, cryptocurrency. How beautiful is it? Anyway, I'm still at the beginning. I'm still a student. I'm still learning. Let's continue with the article. Capital gains from crypto sales. A capital gain is a rise of the value of any asset held, whether it be stocks, real estate, or in this case, ownership of cryptocurrencies. A capital gain is only realized from a tax perspective when the asset is sold. It is important to differentiate between a short-term gain, where the asset is held for less than a year and taxed at a higher marginal tax rate, and a long-term and a longer-term gain, where the sale will be taxed at the more favorable rate for long-term capital gains. Here is the general accepted rule. 1. If you're making profits from trading crypto, this will be deemed as income and taxed at your marginal tax rate. On a sliding scale up to maximum of 45%, that's what you'll be taxed. Sure, 45%, guys. That is if you're trading crypto, hey? Yes, government, bafethu. If you buy and hold crypto like me, I'm a hodler, right? That's what they call us. Just learned this word, I'm new, HODL, hodlers. I'm a hodler. I buy Bitcoin and I sit on it. So they're talking about us here and tax implications. What are they saying about us? And I'm sure there's a lot of you guys out there. If you buy and hold crypto, I'm talking Bitcoin. I hold a lot of Bitcoin. I'm a long-term investor, I'm just getting into this space for long-term purposes. 2, if you buy and hold crypto for an extended period, then sell at a profit, capital gains tax, which is CGT, will apply. Your capital gains gets added to your annual pre-tax income. The CGT, which is a capital gains tax rate, can range from 7.2% to 18% depending on the tax bracket you're in. Beyond this, there are vast areas of uncertainty. SARS has yet to issue specific guidelines on the treatment of crypto, but it is starting to pay closer attention to this emerging asset class, and further guidelines are expected in due course. One of the reasons we encourage a buy and hold strategy when it comes to cryptocurrency investing is because of the tax benefits. It's the difference between a 26% return and a 0% return in some cases, explains the gentleman Saunders, close quote. If you're looking to diversify your portfolio with cryptocurrency and invest over long term, there is a right way and a not so right way to do it. Let's start with the right way. The right way, investing in one Revix's crypto bundles, a single investment option that provides exposure to a diversified basket of cryptocurrencies that is automatically rebalanced every month. is not deemed by SARS as trading assets and therefore benefit buy and hold investors through capital appreciation. Only when the bundle is sold are the gains taxable and the applicable capital gains tax rate. Additionally, investing in one of Rivix's bundles with as little as 500 rands also means that you'll be able to make use of your annual exclusion of 40,000 rands should your investment increase in value. This means that you won't be taxed on 40,000 rands worth of profit, assuming that you don't invest in any other asset for that year. Rivix's 3 crypto bundles can be found on rivix.com. Rivix, you need to pay me now. I'm giving you free plugs here. But anyway, let's continue. The not so right way: creating your own cryptocurrency portfolio and then performing regular reweighing and rebalancing beyond being time consuming and tedious may also become an expensive strategy, as each profitable sale may be deemed a realized trading gain and would be subject to income tax and investors' marginal tax rate. This is the rate at which SARS taxes you based on your annual income. Even if you switch one crypto for another, such as Bitcoin for Ethereum, that may be deemed a realized gain and therefore subject to tax at the marginal rate. Additionally, you won't have a 40,000 rands capital exclusion buffer, as the gains will be deemed similar to income. Sure. Wehan Olivia, who is a partner in the audit division at Mazars, which is a company in South Africa, says if you receive Bitcoin as a gift or for remuneration, there would be a tax event. If the services rendered was worth 5,000 rands, that would have been declared and tax paid on that amount. But if this payment wasn't Bitcoin and you held onto the Bitcoin, which is now worth 50,000 rands, you do not pay tax on the theoretical profit on this asset until the point at which it is sold. Wow. Okay. So hodlers are stand in a better position as far as tax implications are concerned in South Africa right now, as opposed to Bitcoin traders who trade different crypto traders who trade different cryptocurrencies and are consistently trading off one currency to another, and they keep trading and they keep making those short-term gains. I think you guys stand at a position to be taxed higher, or let me say we stand at a better position if we are hodlers. But it's just totally up to you. Other people are in it to make quick money, learn to trade, understand it, be knowledgeable and get in and trade, make their money quick. But you have to know there's also SARS implications. You have to pay your tax, and also us hodlers as well, although we stand at a advantageous position as opposed to our trading counterparts. Probably Nami, one day as I keep learning this thing, I keep advancing, I'll get better at it, and I'll even start trading. So it's good to know this information as far as the tax implications are concerned in our country, in South Africa. They're saying here on this article still, another scenario that could pose a problem for the taxman: a South African resident does a barter trade, or a better, is it B-A-R-T-E-R, barter trade, selling services for Bitcoin, and then uses that Bitcoin to make various purchases in US dollars. The Bitcoin is not sold for a realizable gain, but is steadily depleted through spending. There is no observable tax event in this case, as the Bitcoin is not sold for a profit, nor is it used for generating an income. Oh, interesting. What about a Bitcoin miner using specialized computer software and using electricity to generate Bitcoin? The hardware, software, and electricity expenses, as well as other expenses that are not for a capital nature, should be deductible against any income. However, the Bitcoin generated in this case is seen as income and is therefore taxable. If you are Bitcoin mining using solar power, you should be able to claim that hardware expense as a deduction against income. If you're doing Bitcoin mining in your house, you will have to separate out the electricity used in mining from that used to run household. This may be largely theoretical in South Africa, given high setup costs for Bitcoin mining operations to compete with the data warehouses operating in China, Russia, or elsewhere. Truost, whom I spoke about earlier, points to another scenario that would impact your tax position. If you financially immigrate, there is a deemed disposal of all your assets on the date you immigrate. So capital gains will be applied on cryptos in your possession, even though they are not physically sold. What about staking, where cryptos are lent to the blockchain network to validate transactions, allowing the crypto owner to earn interest? The interest ranges from 4% a year on Bitcoin to as much as 10%. This interest would be deemed as income and therefore subject to income tax at the marginal rate, says Droost. It remains unclear whether this would fall under tax-free interest threshold of 23,800 rands a year allowed by SARS. Many crypto owners are concerned that local and overseas exchanges will share information with SARS. There is no legal requirement by exchanges to report customer trade history to SARS, but will generally do so should SARS demand that information. Crypto investors should also be aware of the common reporting standards where tax authorities worldwide share information, which means your offshore crypto transactions may be well reported back to SARS, as Droost says. What if you take out a loan in rands to purchase Bitcoin? You can deduct your interest payments from taxable income, but if you later sell the Bitcoin at a profit, you'll have to pay capital gains tax. For you personally, broader is perhaps better. You can pick individual cryptocurrencies to invest, but even experienced traders struggle to choose individual specific cryptocurrencies that consistently outperform the overall market. So it is perhaps no surprise that the simple and low-cost solution of diversified crypto bundle investing through a company called Rivix, which tracked the broader crypto market as a whole, has become such a hit with investors. By buying a slice of Bitcoin, Ethereum, and Cardano all in one, you reap the rewards of their successes without getting dragged down too much when any single cryptocurrency pulls back sharply, like what Ripple did just recently. That was quite an interesting article by Ciaran Ryan. I'll put the link in the description. Read the rest of the article, read it again, reread it again, and read other articles that talks about tax implications as far as crypto is concerned in your country. But specifically, I was talking about us South Africans. Welcome to Crypto, guys. Thank you for getting into this space. Once again, this channel has been created to inspire and encourage you to want to go seek more knowledge about digital currencies. I really appreciate you guys. Go share the video, like, don't forget to subscribe and be a part of the movement. We're growing, we're learning this thing, we're talking about money, we're talking investing, we're talking crypto, we're talking Bitcoin, we're getting into this thing, Baba. We're getting into this thing, Baba. It's time to learn. Welcome to Crypto.